Hello everyone, and today our group Money Mind is honored to present our project titled Financial Analyst, and I guess today of our REE operations. Um, Before we start, let us introduce the team. Nguyễn Triệu Tiến, Nguyễn Thanh Nhã, Nguyễn Vũ Minh Trí, and Thanh Triệu Huyền Trân. Next slide, please. And this is a table content of my group. Slide, please. First of all, I will introduction case introduction. RE Corporation founded in 1977, listed in 2000 is a diversified group operation. It's four sister. First is ME market leader in the EBC project. Next, real estate, high quality offshore portfolio, power and water infrastructure, power grids and water supply, and wastewater treatment. Strategy, first is maintain leadership in M&E, accelerate clean energy growth, and the last is capture opportunities from energy gestation and infrastructure development. And financial is a total asset increase from VND uh, 45,000 to 46,000 billion. Debt ratio decreased from 40.5% to 38.2%. Stronger finally financial stability and a row and ROE deadline needs to improve asset and quality efficiencies. Next slide, please. Next slide, we talk about SWOT analyst, so short version. And first is a strength. We have the stable diversity business model. Next is a larger renewable energy portfolio, strong financial capacity, and the last is a leading brand in M&E and premium offshore real estate. Next is a weakness, low asset utilizations, high capital need with a long payback, dependency of imported equipment, and working capital management. Next is the opportunities, rising national energy demand, and PPA enable direct power sale to the industrial user. The last is the growing demand for green building and wastewater service. And the last is the truth. We have accomplished relations, increasing competition, global supply chain risk, and the last is the climate change impact. Next part, please. In this part, I will invite Zhang Thang, Jiu Hyun Zhang to present.
Hi teacher, hi everyone. I'm Hiten. Today I will present the economic and industry and competitive analysis. The first is petrol analysis. Political, the Vietnamese government is accelerating public investment in infrastructure, strongly committed to achieving net zero by 2050. Policies provide a favorable framework for renewable energy expansion and making liberalization risk is complex legal procedure and policy change may delay projects. And the economic is high GDP growth by electricity and infrastructure demand. Inflation remain controlled 3 to 4%, creating a stable investment environment. Besides, potential inflation resource may increase material and construction costs. Mm, and social culture, a young pollution, rapid urbanization, and expanding middle class, growing awareness of environment issue, and ESG encourage demand for green energy, green office, and sustainable utilities. Technology advanced in renewable technology such as wind, solar, energy storage system, ESS, and smart will improve efficiency and reduce cost. Digital transformation in M&E design and operation enhance competitiveness. Uh, Environmental climate change pulls to hydropower output but accelerates the shift toward renewable energy, increasing environmental regulation, prioritize green and sustainable projects. Finally, is legal regulatory framework for PPAs energy projects, permitting land planning and environmental standard demand uh, complex, um, requiring strong compliance and government capability. Next is postal forces analysis. Uh, the first is industry rivalries. Competition intent across three key sector renewable energy sees fierce competition from domestic and international IPP. M&E face significant price and quantity competition among multiple contractor. The commercial use estate market in Hanoi and Ho Chi Minh City is also highly competitive among building owners. The second is threat of new entrant, high entry barriers in energy and water due to large capital requirement and complex legal procedure, lower entry barriers in M&E attract new contractors. The third is suppliers power rely on a limited number of foreign suppliers for key equipment such as turbines, modules, and inverters, giving suppliers strong bargaining powers. The fourth is biopower customer exerts strong pressure on pricing and service quality, especially in M&E and real estate due to abandoned alternative. Conversely, the um, utility makes electricity water is more stable due to long-term contract with EVN or DPP industrial customers. Too dependent on EVN grease negotiating challenge. Finally, treat a substitute conventional power sources and decentralized solution can substitute risk offering. Next is overall business environment assignment. Macroeconomics favorable with strong GDP growth, controlled inflation, and stable interest rates, boosting demand across risk segment. Demographic, young pollution, and rapid urbanization create less markets for electricity, water infrastructure, and office space. Industry competition, highly competitive, especially in renewable energy and MER, requiring continuous innovation and cost optimization. Raw material and supply chain, significant risks from import equipment dependent and global price vol- volatility, requiring robust supply chain and a long-term procurement strategy. Next year, finally, and next year financial analysis. Gross margin in first one gross margin decreased from 46.2% in 2022 to 3 to 37.3% in 2024, showing that the company is facing pressure from cost inflation and price competition, leading to narrowing profit margin. Performance has declined over time due to the post-COVID-19 economic cycle, which had reduced construction order. Um, Next year, ROA return on assets inferior to ROA declined from 3.4% in 2022 to 15% in 2024, reflecting lower access utilization due to lower revenue and higher depreciation. Explains the downward trend. Success the need to optimize access to maintain prior profitability. Finally, debt to equity ratio in Q3, the ratio slightly decreased from 0.5% in 2022 to 0.46% in 2024, indicating a stable capital structure and good debt control. This supports the company's strategy of financing projects through low interest debt, helping to maintain growth without destroying equity. Next is non-financial analysis by Thanh Nhã.
And the next content is the non-financial analysis. And the first we will talk about the governance and transparency and capital costs. The maintains strong disclosure practice of which reduce governance risk and prevent static misalignment and increase investor confidence and lower the cost of capital for the future. Protect corporate credibility by avoiding perception of the greenwashing. And the two is the human capital operation and efficiency and profit margin, sustainable internal profit driver, strategic investment in human resource, HR, focus on training and the ESOP program, reduce onboarding time, increase productivity, and financial impact. 1% increase in the EBITDA margin from productivity gains and can contribute about the VND 83.8 billion to EBITDA. And then 3 is CSR, environmental protection and cost saving. The 3 pillar framework, the rule environment and the CSR generate financial benefits. The refocus, the rule environment CSR have minimized legal and conflict risk, significantly reduce the likelihood of fine or remediation costs and sale on operating costs. And the next is for brand equity and future revenues, the rule CSR activity and the strong service quality. Brand is increase customer loyalty and reducing revenues, reduce customer acquisition and cost and enable premium pricing. For example, the company 10% reducing in the marketing expenses on VND and 200 billion purchase, sell the VND to 20 billion annually and improve net profit. And the last 85 direct financial impact and strategic recommendation. The non-financial activity to provide a clear competitive by improving market variable via productivity, the cost control, and lowering the cost of capital. And 20 to 24 mình combine plus 3% revenue the rule from the higher productivity and 1% operating cost saving from environmental and can raise the pre-tax profit by VND 130 to 180 billion, contributing to sustainable long-term growth. And the next pattern, my friend, is student will regime.
In this section, we evaluate REI's stock performance and financial trends from 2020 to the first half of 2025. REI's stock price has moved in line with its earnings cycle. In 2022, the price peaked at around 90,000 per share thanks to record profits. However, in 2023, the market downturn and uncertainties related to FITI policies pushed the price down to ND 55,000, 63,000. Entering 2024 and 1H 2025, supported by strong cash flows from energy and office leasing, the share saw price recover back to about the ND 70,000. Financially, REI maintains strong operational efficiency with revenue consistently above 8,000 billion, a solid net margin of 28.37%, and ROE above 10%. Its debt ratio has declined from 48.6% to around 36%, indicating a healthier capital structure. With stable cash flows from energy, water, and office leasing, REI is considered a safe defensive stock. Next slide. Potential and growth prospects. REI is transforming into an integrated energy infrastructure conglomerate aligned with PDP-8 and Vietnam's net zero roadmap. Its future growth is driven by three main pillars. 1. Renewable energy. Projects such as the 128 MW thriving wind farm and rooftop solar systems are expected to contribute 15-20% of total profit by 2026. 2. Office real estate. High occupancy rates above 95% at Air, Town 6 and Tower ensure stable cash flow. 3. NA contracting, supported by rising construction demand and public investment, especially the Long Thanh Airport package worth VD2, 500 billion. REI's valuation is also attractive, P around 10.7 and P 1.25x, both below sector averages. DC valuation suggests a fair value of VND 72,000, 75,000, providing a good margin of safety. Along with capital appreciation, investors enjoy annual cash dividends of 3-5%. Investment decision overall. REI demonstrates the characteristics of a defensive growth stock: low leverage, above industry, ROE, consistent dividends, and an expanding infrastructure portfolio. We recommend a long-term buy and hold strategy for 2-3 years. The target price for 2026 is around 90,000 per share, representing about 30% upside, excluding dividends. Next slide. Conclusion. In conclusion, REI possesses a strong and defensive financial foundation, but still faces short-term challenges such as declining margins, lower ROE, and long collection periods. However, its strong SG profile, large renewable capacity, high office occupancy, and experience them, and e-operations enhance long-term cash flow stability and access to green financing. Looking ahead, opportunities under PDP-8 and the DDP Pay mechanism can unlock new revenue streams and improve margins. To fully capitalize on these, RE should enhance operational efficiency, improve working capital management, accelerate project execution, and better quantify the financial impact of SG initiatives. If these improvements are achieved, RE is well positioned to sustain its defensive growth trajectory and deliver long-term value for shareholders. Next slide. That concludes our presentation. Thank you very much for your attention.